we talk about this all the time, but it gets confusing for people and they can't remember. You mentioned it, named perils versus all risk and the ACV policies. Let's talk about those two things and what are the differences and how can someone examine their policy to make sure they're protected?
All right, so when you're buying insurance, two basic themes to keep in mind. The first thing is my policy a named perils policy or an all risk policy? Here's the difference. Named perils means we don't cover anything unless we tell you specifically that it's covered, right? So if it doesn't say fire is covered, then it's not covered. All risk means that everything's covered unless we specifically exclude it. So it doesn't specifically exclude some source of water loss. Every water type of loss that you could have is covered, right? So obviously, the better policy is the all-risk policy. They tend to cost a little bit more. So if you're one of those people that shops insurance strictly on price, the all-risk policy is going to be higher.
So this goes again. This is old Zig Ziglar. He always said price versus cost is different.
Right.
So the price is cheaper, and we're all structured to price, because that's all we understand. So we shop for price, and we get a named perils policy and don't understand why it's $500 less a year or whatever.
Right.
So the price is cheaper, but the cost when something goes wrong
huge.
is astronomically.
How can you tell the difference? If your policy form says HOA on it, that means it's a named perils. If it says HO3 or HOB, it's all risk.
Huge.
Very
so
simple.
look at your policy. If it says HOA right now, I want you to call or text 469-319-0660. We're going to have John examine that policy for you.
Absolutely.
Okay. It's a big deal, guys. Huge, especially in Texas right now.
Second thing now is replacement cost versus ACV. We get into this on the roof all the time, right? You've got an old roof, and the insurance company says, oh, I'm sorry, Andy, we have to depreciate your roof. Right? So you've got, and I'll make this up now, so you've got a $15,000 roof that's 17 years old. They're probably going to give you something like 30 cents on the dollar. So 30 cents on a $15,000 roof is $4,500, and out of that they take your $3,000 deductible because you're in a $300,000 house. Here's your check for $1,500
on the roof that you need that just has $15,000 in damage on it.
Ouch! Right? So if you get a replacement roof, it's the $15,000 in that example. Less your deductible, $3,000, now you get $12,000 back. So it's very important that you understand, am I replacement or ACV? And there's some clues to help understand that as well.